Hello and welcome to my latest weekly video news from Madison's. Well, I've returned from a lovely 2-week holiday. Sun is shining, market is still booming, feels really great. And of course, while I was away, Bank of England cut base rate. It's been the first cut they've done for 4 years. Um, Inflation stubbornly staying high. Back in beginning of 2023, it was sitting above 10%. And so the Bank of England started to raise rates, 14 consecutive rises to base rate to try and control inflation. The argument is if your mortgages are costing you more money, then you'll have less money in your pocket to spend on things, and so inflation gets tamed. And it's been really on the cards really about whether they would cut it. Certainly for the first few meetings, the markets were still predicting a 50-50 split of whether they thought it would go down or not. And you might be surprised by that. Inflation has now sat at the government's target of 2% in both June and July. So you'd think, well, why are they not reducing it? And the problem is service inflation. So less about the cost of the goods in your basket if you go to the supermarket, and more about what it's costing you for a holiday or restaurants. And that inflation is still sitting stubbornly high. So Andrew Bailey, convinced by his other members of the committee to do a 0.25% reduction, because it was felt that not to do that could have more detriment on the wider economy. So it wasn't a really unanimous decision, a split vote, but they did reduce it. And now we're seeing that feed through into mortgage rates from the high in July 2023 when the average fixed rate deal was about 6%. It's now sitting at closer to 5%, and indeed down to about 4.5% actually in some ways. 2-year rates sitting about 5%. And indeed last week, the first sub 4% deal relaunched to the market again. Mortgage market has really fine margins, so it reacts strongly to these base rate changes. And are we expecting many more base rate changes this year? You might be thinking now that first step has been taken that we're going to see a barrage of rate reductions, but it's probably not going to happen actually. History shows that following a period of sustained raising of rates, they then plateau for quite a bit. So I predict might come down another 0.25% this year, but I don't think we'll see anything more than that. I think they'll just stabilise that. And of course, the one thing all that will do is stimulate the market. So how is the property market looking while I've been away? But still felt really busy at Madison's, and Zoopla House Price Index came out with their latest data. That has shown that price growth has been relatively flat over the last 12 months, 0.1% growth. That's nothing really. But here in the Southeast, a different story. We saw big swings of growth in value in the pandemic, and accordingly it takes a little bit longer for us to recover. We had a bigger drop down and further for us to go up, and that's probably the hardest conversation I have with anybody who bought at the beginning of 2022. You're probably going to lose money if you sell now unless you've made significant material enhancements to your property. Property values have gone down by about 7% in the area, and so yeah, it's been a little bit tricky for me to manage those conversations and make people understand that it's going to have to hold for a little bit longer to get their money back. But all the indicators looking good. Buyer demand is good, up about 20%. More properties available for sale by about 16%. And generally about 96.8% of asking price being achieved. So that's all pretty good indicators that are looking good in the market at the moment. Well, the latest copy of the Business magazine is out, Tunbridge Wells Business, lovely Victoria Sampson and Joseph Oates from Cooper Burnett on the front. And buried deep on page 61, I think it is my latest article. So I wrote this the day after the last general election result. And talked about what I felt a Labour government would mean for the property market. So my thoughts there. And one area that obviously Labour have said is they're going to build 1.5 million new houses. And while I was away, Angela Rayner, Deputy PM, came out with the new housing targets. So she wants to completely overhaul the planning system and basically reintroduce these things called house building targets to local authorities. It will be really interesting to see how that pans out. Developers really welcoming it. They're delighted. They love house building targets. And one area that every local authorities will be looking at is this thing called grey belt land, which is not so nice green belt land, a new term, basically disused car parks or commercial buildings that sit on greenbelt land, covers about 13% of our country, greenbelt, and looking to develop those. Controversial, absolutely no doubt about it, because it is still felt to be greenbelt, but yeah, it'd be interesting to see how councils interpret that. They're basically demanding more guidance around those new targets and what will constitute grey belt land. So I'll keep you posted on what happens with that. Well, of course, it's the heart of summer now. Lots going on. The warmer weather has returned, and this weekend, Summerfest coming to the Spa Hotel. It's running on Saturday and Sunday. I'm going to be there on Saturday night with Mint DJ. It'll be great, but lots of other musical acts, and it's a beautiful setting, wonderful hotel. So do head up and support that if you can. And the Antiques Fair returning here on the Pantars, cancelled a few weeks ago because of high winds, but back this weekend. That always brings such a lovely buzz to the Pantars. So whatever you're doing, I hope you're enjoying this better weather, and I look forward to seeing you again next week. Bye-bye.